Hi, I'm Lenora. I'm a full-time realtor covering Central Virginia, including Roanoke, Lynchburg, Smith Mountain Lake, and the surrounding area. I'm also a black belt and sensei teaching a karate class at a women's college called Sweetbriar. It's great to meet you. But enough about me. You're here because you want to buy a house and either you're not sure where to start or you've done this before and the one thing you do know is you do not want a repeat of last time. Not to worry, I'll coach you through it. We've talked about how to think through what you want, how to build a great team, how to pencil out a budget and get pre-qualified. So what happens when you're ready to make an offer? In an intense seller's market like we've seen in the early 2020s, you'll need to be prepared to strike quickly and decisively. There'll be a lot of competition likely. You'll need to make decisions about your offer amount, your down payment, and your EMD, whether or not you'd like inspections or as-is options, and you'll need your pre-qual or proof of funds in hand. When you find the one, there's always a time crunch, so it helps to be familiar with the contract you'll likely be using in advance. So take the time before you get there to give it a skim and ask questions if you don't understand the wording. I'll remind you, I'm a realtor, not a lawyer, but I'd like to walk you through a typical contract in general layman's terms. That'll help you know what to look for and what questions to ask so you know what you're signing when the time comes. Now, this is going to be a lot, but bear with me. It's important. So let's have a look, shall we? Now I'm going to share my screen so that you can see what I'm looking at here. There we go. This is a typical state-approved purchase agreement that we use here in Virginia, where we're broken up by regions. So Roanoke, Seaville, Capital Region all have their own versions and thus their own customs, but this has some of the best protections for buyers. So I tend to gravitate towards this one when I'm working with buyer clients. This one is copyrighted by the Lynchburg Association of Realtors, obviously, so you'd need to be working with one of us to use it. You can find others online, but make sure you have the right state and the most up-to-date, and know that the online ones may not be as thorough as your local realtor association has. We start obviously with the date and identifying the players. We identify the property 3 ways to protect against typos. We want to buy this lot, not the one next door by accident. Thank you very much. Your realtor will look that up for you. The personal property or bill of sale, here is a little trick that a lot of realtors do. We will put an A in this slot, and the reason for that is because not all, but many mortgage underwriters will balk at the idea of writing a 30-year loan for a refrigerator that's only meant to last 10 years, to the point that they will even hold up the entire closing. So to get around that, what we will do is use the personal property sales agreement as a separate attached document. And you'll notice all of our add-ons connect to the contract with the date and naming the people and the location. And here we'll list all of the appliances in a separate transaction that just happens to be happening the same day for maybe $1. And that's how we'll address that. That just keeps things a little bit separate and simplifies things down the road. The addenda are add-ons that include things that are very common, but not so universal that every contract has to have them. For example, the lead-based paint disclosure is required on all homes built before 1978. We have to disclose there's a possibility of lead paint. If the seller knows for sure, they have to disclose that too. These are some other common ones, and you may need to fill one in here. If you're buying from out of state, you may need a sight unseen if you haven't seen it in person. If this is part of a 1031 exchange, you have to disclose that up front. That's where your purchase amount goes. If this is subject to financing, and this is why you need your pre-qual and your financial ducks in a row in advance. A conventional loan typically takes about 30 days. All of these others, more like 45. Cash can do it in 2 weeks if there's inspection, less if there's no inspection. So we have to disclose all of that from the get-go. Back in the olden days, we used to be able to ask the sellers for some help with the buyer's closing cost. That includes things like your loan origination fees. But in this extreme seller's market, I'm afraid that's a no-go. And this is another reason that cash is king. If there's financing, the bank's going to have an appraisal. On financing, we'll let them know, or we'll send out an option for a closing date that we would prefer. And again, you have to remember there are other players, including your lender, and the seller may have a time frame that they would prefer. On the wire fraud, know where your funds are meant to go. For example, some brokerage firms will hold the earnest money deposit in escrow and forward it to your settlement company for closing. My company will not do that. All the funds go to the settlement company to keep it simple. The earnest money deposit is actually different from the down payment. It's a sort of skin in the game promise that if you back out of this for most reasons, you will forfeit that and the seller can keep it for their trouble. That is typically held by the settlement company in escrow until closing day, when it's rolled into your purchase price. And the settlement company is clearly laid out in advance, so we all know where we're going. You have to disclose in advance if you intend to occupy this or if you're planning on using this as a rental or a flip. The RPD is required on every home except for a brand new build or land. And what that is just a separate disclosure where the seller's responsibility to disclose any material fact that they know of that would reduce the value of the home. And of course, they don't have to go out of their way to research every single individual topic under the sun. So if there are particular topics that are of concern to you, let your team know. They should be able to point you in the direction of what websites you need to research those. Fair housing disclosure and equal housing opportunity, no steering, no redlining. Property Owners Association, HOAs, and condos. If this is the situation, the seller has to forward the rules and regulations to you in advance during the contract to close period. Once you get them, you'll have typically 48 hours to read them over and let them know if anything therein is going to be a deal breaker. Property inspection is a big one in this extreme seller's market. Most sales are as is. You can still have the home inspection for buyer's information. If you don't have to be overly aggressive, if there isn't too much competition, you might be able to get away with an out paragraph that says if there's too much, that you can bow out based on the inspection. If it's not as is, then when the inspection comes back, you can let them know what repairs you would like to see them make. And you have a limited amount of time to get your inspection done and your list of repairs to them. And they typically have, at least in the state of Virginia, 2 days to respond, either yes, no, or with their own counter list. And when you get that, you have 48 hours to respond yes, no, or here's a counter to your counter list of repairs. The default lets you know what happens if somebody defaults on this contract. So this is important to know. And it's another important reason to have your financial ducks in a row and to know what you want before you offer. So if you get into this and you bow out outside of the rules, you could be opening yourself up to lawsuits. So make sure you have your ducks in a row before you offer and you think it through. The settlement company will research and make sure that everything herein meets and is up to standards, and then at closing, they will collect all the funds and disperse appropriately. If you want a home warranty, this is especially a good idea if it's as is. You can get a home warranty to cover appliances and light repairs for the first year at a discounted rate if this is part of a home purchase. It's easier, I find, to include this from the get-go and then remove it if you decide later you don't want it. Budget for about $700, at least with the company I usually use. And they're pretty good about letting you use your own contractors. So reach out if you'd like their information. In the olden days, we could ask the seller to cover that, but not in such an extreme seller's market. It really is up to the purchaser if you want it, unless they've already got it. Related business disclosures for a listing and selling broker. For example, my particular company has a business association with a lender that happens to rent space in our buildings. So we have to disclose that even if they're not a part of this particular transaction. So that's the type of disclosure that is pretty typical to come up. Any additional terms we would plug in here. If there isn't already an addenda outlined for that. The purchaser, that's you, discloses if you need to sell your property or anything else in order to be able to afford this property, you have to disclose that from the get-go. So unless you have already said in this document, this affirms that that is not the case. And again, the settlement company will research and address all of this. Expense prorations include things like the taxes, which will be prorated, the property taxes to the day of closing, with the seller paying up to closing and the buyer paying afterwards. The title research land use assessment only applies if you're getting a cheaper tax rate because you're raising livestock or agriculture. The risk of loss, say the property catches on fire during the contract to close period, is assumed by the seller up to closing day and the buyer after closing. Equipment and condition on inspection. Remember, the appliances, we've already separated those out, but the rest of the home should be clean and in broom swept condition. Otherwise, in the state that it was upon ratification of this contract, meaning that both parties signed and this became official. The well and septic, there was a big change to this law in 2020. So be sure you have the most up-to-date contract. But we disclose here if there's a well or a septic system, and if there are separate addenda to address that in the inspections that might be required. Wood infestation is an interesting example of how these can differ by region and set up regional differences. So for example, in Lynchburg, because these contracts were set out with that in there, typically we would ask the seller to have it inspected for pests And if there was a problem, we'd ask the seller to have it sprayed, and then the purchaser would just keep an eye on that in it going forward. In Roanoke, however, the contracts were never written to include that. So you can use, for example, the Lynchburg contracts anywhere in the state of Virginia, but it helps to know in advance that if you're offering in Roanoke, the other contracts are not likely to mention wood infestation. And so this is going to look like a really rare and strange contingency that you're asking for, and no other offers are asking for it. So it's going to throw sellers for a loop. So if you're using these in a different region, it's important to know what the regional customs are. You may not want to take advantage of every option. Now, state limits the amount that the seller would have to spend to remediate to $1,000. You can make that less if you want to, but this really only applies to paragraphs F and G, so termites and well and septic. Again, you have to let them know in advance if this is going to be a conventional or an FHA or VH loan. Mechanics lien is when a contractor like a plumber or electrician is asked to do work on the home, but they never get paid. They are able to put a lien on the home so that if it is ever sold in the future, they can take their payment out of the seller's proceeds. The settlement company should research these and ferret out any issues that have come up. During the contract to close process, we're going to ask for receipts if any work is done during that period so that we know that it was paid for. Miscellaneous just addresses any general rules, which of course apply to this contract like any other. This creates its own deed, and once this contract is completed, then this contract ceases to exist and the new deed is filed with the county clerk's office. Seller represents they have the right to sell the house, and we're not signing out for mother, mom, or grandma, or the wife. Without their knowledge, electronic signatures are a-okay. Acceptance, we used to use this as a means of putting pressure on the seller so that they couldn't wait a week and hope for more offers. In this extreme seller's market, they're going to get more offers by the end of the weekend, but we still use it as a means of protecting your right to take your ball and your stick and move on. In other words, a contract like this is a lot like a check. It's legally binding when you sign it. You have sent off something that speaks for your funds, and you can't spend those funds twice. So once you have an offer out, you can't legally keep house shopping because you couldn't put in a second offer. Like with a check, it's legally binding to you. It's just not completed until the other party signs the back and cashes it. And if they never do that, it leaves a big question mark every time you're trying to balance your checkbook. So unless you proactively void out that check, this creates a time limit on it. So the check automatically voids if it's not signed and cashed within a certain time frame. That way, you can force them to let you know within, say, 48 hours. And if they fail to do so, then this ceases to be valid. You can take your ball and your stick and move on. Now, can they still call you if another deal falls through and ask you if you're still interested? Absolutely. But what they can't do is just go ahead and sign this check and cash it. God forbid that you have another offer out there that gets signed at the same time. So your realtor will look up and fill in the rest of this and send it to you for signatures. And that is the basics of a typical contract that we use. So like I said, every state is different here in Virginia. Every region is different, but this should give you an idea of what you're looking at and for. Ask your realtor for the forms you'll likely be using and a brief walkthrough in advance. So when the time comes, you know what you're signing. It should be similar, but in a different order with some regional differences and of course reflecting the current state laws where you are. For each offer, you'll need to think through and make decisions about your offer amount, your down payment, your EMD, yes or no on inspection out versus as is, unless the listing was specific about that, and many of them are. Yes or no on a home warranty. Is this going to be 30 days to close or 45 or something else? And do you have a preferred day of the week to close on? Settlement will need it to be a weekday, but other than that, you can work it so it will work with your schedule. Next, we will talk about the contract to close process and what to expect when you're inspecting. As always, feel free to reach out with any questions, message or email me. I keep a hectic schedule, but I'll get in touch as soon as I can.